commentary on two trades I've taken today. One was a loss and the other one was a profit. So we're going to begin with the one that was a loss. We took 254 today. We were expecting some kind of retracement down to here and then a bullish impulse to the upside. However, it just consolidated around where we entered from and went and hit our stop loss. On this trade, I was risking 0.25% of the account, and I was doing that because of this week and the amount of high volatile news that we'll be getting. And then there's a second trade I've taken today. This was a proper break of structure up, came back down to the area of support here, and that support is resistance turn support, and we relied on this level to basically make an expansion up. It's the exact same as in this situation, but the timing is different, and this one went quite well. It went and created a high. All right, let's go down and do the analysis. So this is what I saw in the 4 hours: the lower high, the lower low, the higher high. These areas are retracements: high low, high high. And when I was thinking about those trades, we were retracing on the 4 hours and the 1 hour. And as we can see, this area of resistance on the lower high turned support, and we made a higher high. So we're very bullish on the 4 hours and the 1 hour. See, we're retracing on the 1 hour as well, and we're very bullish. And on this retracement, I was expecting, this retracement to end somehow on the 15-minute. You can see in the 15-minute we have this bunch of retracing, and then these areas are retracing as well on the 15-minute. So this area of resistance, we would come back down to it and use it as a support. The previous entries I've done, the one I lost here, we went off just the top of that area, and market obviously decided to go a bit down and start retracing from below here. And here was the area that the proper break of structures happened. Here it wasn't. Here was just two green candles that went up, and we didn't get any bullish movement. That's why I hit my stop loss. And the entire trade on this day that I was looking for was revolved around the expectation that the 15-minute bearish retracement, which is this, will come to an end, and it will make it reasonable for us to take the buys. Maybe this could be the start of a impulse. We never know. It could be the same impulse that happened here that will happen here as well. So we could start going up from there. We don't know, but there's a possibility that this could be the start of the bullish run. All right, let's go down to the 5-minute, the entry time frames, and the 3 minutes. So the 3-minute, we're making lower highs, lower lows. We're bearish. And at this point is where we took that previous trade, which was the loss. So let me just pull that one up. See? We were expecting the price to move away from here. However, it hasn't taken out, or it hasn't went above this high. And I think I didn't see it because I was on my phone that time, and I was that's why I don't like trading off the phone, because you will not see the whole picture. You will not see the whole trend. You will just see segments of it. I just saw this price running, and I thought it went above here, so I just took the buy from there when it came back down. But obviously that was in the right area. I hit the stop loss. Then I came down to my computer, and as we saw, this lower high, then lower low, then lower high, and then the market failed to make a lower low. Therefore, made a high. This is where the idea came from. Then we said to ourselves, okay, the market made a high. It will use the previous areas of resistance on the lower high. That will turn to support and create a higher low. So you can pull the fib as well from here to there. We came perfectly down to the 50%. Same area as the resistance turn support, and we were targeting this area of support that can turn to resistance. So we're just playing from this area to that area, and we're expecting the market to bounce from this to there. And this trade was around 1 to 3 risk reward. We risked only, I think, 0.25%. So we haven't really got the 3% return that we expected. We got more of like a half something, 1.5% on this trade. And that basically recouped for the loss we took, and it gave us extra profits as well on top of that. So that's why risk management is really important. Like you can take these losses all day long, but as long as you get a big trade like this that will pan out to your favor. I mean, if we were holding till now, it will be at close to, see where the price is at right now, it will be close to 125, half of that, which is because we risk half of that, half of 1%, 0.5, quarter of that. So we'll be around 1 to 2.5. See, we held the trade even longer. But with me as a day trader, I don't really hold trades for that long, so this was enough for me for the day. And if this really does make a higher high, we'll be turning bullish on the 15-minute, because the 15-minute is still bearish. You see, the lower high is here, the lower low is here, and we're just retracing on the 15-minute. We caught the trade on the retracement, so we just have to be mindful of that. Another reason I exited the trade where it was is because of this. You see, we came back up, and then we start hitting the 50% of this fib, and then yeah, market was most likely going to go down from there, but obviously it hasn't. It's more likely going to dig up and probably create some bullish break of structures in the 15-minute. Okay.